Central bankers say they stand ready to act, but as we've mentioned in the past, do they have the ammunition to act if the coronavirus crisis continues to hit the markets? Here's what former Fed Governor Kevin Warsh said on our air last week.
I think it's likely to be a gunfight out there. When I look at the world's big central banks, not a lot of them have guns. Maybe the Fed has a bigger gun than everyone else, but the Fed probably has a knife. I wish they had a big, powerful gun coming into this moment. I wish they had more ammunition. I wish, for the discussions we've had on this show over the last 9 years, they had prepared themselves for an exogenous shock.
So joining us now, hey, Ken Rogoff, Harvard professor of economics, public policy, former IMF chief economist. I guess just to start off, Ken, whenever anyone has said we should be hesitant about getting too low because we won't have anything the next time we need something, is this what people were worried about? This is the type of exogenous event where we could use some dry powder, or do you think we're okay in terms of the ammunition the Fed has left?
The Fed has a bit. I mean, the ECB, the Bank of Japan, have very little unless they change their framework a lot. Yes, this is exactly the kind of exogenous shock where it's not just the Fed, it's not just central banks, it's fiscal policy. I think fiscal policy can do a lot, but we're already running $1 trillion deficit in the United States. If there's a recession, it would get bigger even without any action. So yes, that's a concern.
Would what we have left be effective in trying to stanch the sentiment, the negative sentiment in the markets that we saw last week? Do you think, Ken, is that something we need to do, or do we just stand pat, do you think, and deal with it, with science, maybe?
Well, I think that's well put, the science point. I mean, I don't know what people were expecting from the G7 ministers. They're not a group of medical doctors. It's absolutely still unfolding. It's unknown. Frankly, as an economist, I don't know to what extent this is a demand shock. People stay home and don't buy anything. Or is it a supply shock? People stay home and don't make anything.
Both.
And I think it's still unfolding. They almost certainly are going to have to act. But, for example, the view that the Fed's going to cut 50 basis points next time, as opposed to, say, here's 25 and 25 more if you need it, they're still seeing how things are unfolding.
I guess, Ken, if we go negative, and I mean not from nominal yield, but if we went negative like Europe, there's plenty of ammunition left. We go, right? I mean, once you're there, you can even go more negative. It doesn't work, though.
Well, I mean, if we changed our framework, there's a lot we could do with going negative, but no one's prepared to do that at the moment. I actually think that's the future 10 years from now, but not now. There is really not all that much they can do. And quantitative easing is smoke and mirrors. I disagree with my friend Ben Bernanke that it's really going to do all that much.
So, Leisman, in Denmark, they'll pay me to buy a house or something? I can make money every month?
Leave the mortgages negative and you would get back a return if you were to be...
But we need to change things here. We're not headed there anytime soon.
There's a lot of reluctance on the part of Federal Reserve officials to go negative. But also, I think, as Ken says, there's some scope there for the Fed to do things with rates. With a great question, Ken. You're asking the question we've been asking for a week now. Is this a demand shock or a supply shock? And what rates do to solve that problem? What do you make this morning of the G7 statement, Ken? Is it enough? Is it sufficient as at least an initial response from the G7 group of nations?
I mean, I think it should have been what markets expected. I don't think anyone knows what they're doing. So how they're going to put it into a statement. If you say you're going to use fiscal policy without being specific, I don't really know what that means. Obviously, the central banks in Europe, you played that clip from Kevin Warsh. That was very well put. The U.S. might have a knife, and the Japanese and the Europeans don't even have that as far as the central banks go. I mean, I've heard the Germans are thinking pretty seriously about doing a fiscal stimulus. If they are, probably everybody is. But this G7 call was probably put together pretty hastily. And, they didn't have an agreement in advance. If you don't have an agreement in advance, you're not going to get one afterwards. So I thought what they said was sensible and reasonable. And, yeah, I think there's action almost surely coming on both the fiscal and the monetary side. But again, they don't know what's going on. And remember, if it's a supply shock more, and it's not in the near term, but it might be in the longer term, that actually, and we have to really go way back here, that puts upward pressure on prices. We'll see supply shortages and such, and there's less you can do.
Follow that through. If you don't know what's going on, you don't know if it's a supply or demand shock, I'm a little unclear what you're advocating. Act anyway, or wait until it's clear and hold off or hold your bullets back until you know essentially what the enemy is?
Well, I mean, there's clearly a panic going on, and the Fed especially wants to avoid getting backed into a corner where it's always got the markets back. The market calls for a cut, and then it has to cut. And I think Federal Reserve officials are very concerned about that. But at the same time, really the downside to this is pretty asymmetric. I mean, I would say the odds are strong that things will just get better. It will turn out, as you've been saying, a bad flu season, and things get better. But the downside's pretty significant. So there might be a smaller chance we go to the downside, but people are pretty scared about it. And I think it's important, first and foremost, to address the direct problem. How are you addressing the health system? How not to overreact with quarantines and border crossings? How do you calibrate this? Figuring that out. But I do think that we will end up seeing fiscal response, but ideally, in the first instance, targeted at things. By the way, if the U.S. really wanted to do something to calm people's nerves, if it really wanted to do something to help, we would pull back from the tariff war, maybe end or cut back the tariffs to China, put in a ceasefire. That would help with the global supply chains. It would calm nerves. Ain't going to happen, but that would be my number one choice for something to do right away.
Except for this is only half a joke, 7.5% of zero is still zero. If nothing's coming over, it doesn't quite matter if you have a tariff on it or not.
I don't know if that would calm people's fears, too. Like, wait, things are so bad, we got to change our entire policies.
Ken is not the first person to bring this idea that the president could unilaterally
did something with Iran.
Remove the tariffs if he wanted to.
We did something with Iran on some sanctions to try and help out there. So we can do with Iran. We could
do it for China.
Well, I just wonder, Ken, we got to go. I wonder how long we're talking and what effect on global GDP. I guess we'll know. And maybe we get it back. Maybe we snap back and we don't lose it. Maybe it doesn't, go away forever.
Pretty significant effect in China. I think that's where the biggest effect's going to be.